Throughout the past few years, lithium has made a significant debut as an investment target. Investors from around the world have become interested in this rare metal due to its price, which has climbed by more than 500% between the years 2020 and 2021. And I'll explain why. What's the connection between your smartphone, laptop, and an electric car? All of them are powered by lithium-ion batteries. Because of the increasing demand for electronic goods and electric vehicles and the challenges involved in extracting lithium, there currently needs to be a notable imbalance between supply and demand. This presents an opportunity for investors to capitalize on this situation. However, despite appearances, there is more complexity that meets the eye in the lithium market. The market has many intricacies, and it is essential to grasp each one to make informed financial decisions. To be of assistance, we have created a video that will explain precisely what lithium is, what drives the markets for lithium, analyze whether or not the metal is a good investment for the future, and define the many alternatives for acquiring exposure. What are lithium stocks? Lithium stocks are shares of companies that mine or process lithium. Unlike gold and palladium, lithium is not a commodity that traders can buy and sell. On the other hand, investing in publicly traded lithium companies can give them exposure. This is the same as uranium stockpiles and uranium itself. Most lithium comes from brine deposits or spodumene mines. Even though Australia is one of the biggest lithium producers, it has the most spodumene mines. South America makes most of the brine in the world. The two main kinds of lithium businesses make lithium carbonate and lithium hydroxide. As demand grows, manufacturers are focusing on making lighter and faster devices while also being careful about the kinds of lithium they use to make them. Where does technical-grade lithium differ from battery-grade lithium? In the marketplace, you can find many lithium products. While the more expensive lithium carbonate and lithium hydroxide are used to create lithium-ion batteries, technical-grade lithium is employed in ceramics, glass, and other industrial uses. It has been found that these lithium products have technological uses as well. Demand for lithium has increased a lot because renewable technology is getting better quickly, and big companies like Tesla use lithium as a critical part of their products. Some traders are worried about market instability in the future. Still, others see investing in lithium as a great way to make money in an industry that has seen a considerable increase in demand. Traders can buy lithium mining stocks, shares in companies that mine lithium, or lithium battery stocks, shares in companies that make batteries. You can also buy and sell shares of companies participating in both. Where does technical-grade lithium differ from battery-grade lithium? In the marketplace, you can find many lithium products. While the more expensive lithium carbonate and lithium hydroxide are used to create lithium-ion batteries, technical-grade lithium is employed in ceramics, glass, and other industrial uses. It has been found that these lithium products have technological uses as well. What factors drive the lithium market? Tesla was the first carmaker to stir interest in the lithium space. The company's Nevada-based gigafactory initially began to stir interest, but there are other lithium-ion battery megafactories that Tesla has planned. Tesla is not the only company with megafactory ambitions. According to Benchmark Mineral Intelligence, China will develop 1 mega battery factory every week by 2020. The firm is watching 300 lithium-ion battery megafactories, 226 of which are in China, 30 in Europe, and 23 in North America. Major automakers such as General Motors and Ford have increased their EV production ambitions. Notably, the Biden administration's Inflation Reduction Act, passed into law in mid-2022, includes a $369 billion investment in climate action and energy, including EVs and EV infrastructure. In short, the world will still need a lot of lithium, and some of the biggest lithium miners are already working to ensure they can keep up with demand. For example, at the beginning of 2021, the largest lithium miner, Albemarle, announced plans to double lithium production at its Silver Peak operation in Nevada over the next 5 years. This is to keep up with North America's growing demand for EVs. Doing this will cost between $30 million and $50 million. Livid, spun off from FMC in 2018, is also a big lithium producer. It is adding 5,000 metric tons (MT) of lithium hydroxide to its U.S. project, and it should be ready for commercial production by the end of 2022. The lithium carbonate plant that Livid is building in Argentina to double its capacity to 40,000 metric tons is expected to start making money in 2023. By 2030, the company wants to add another 30,000 metric tons of capacity. Analysts are optimistic about the long-term fundamentals of the commodity because of these and other market-shifting events. They are incredibly optimistic about lithium demand as the number of electric cars grows. How to invest in lithium stocks? The conventional approach to investing in lithium entails making stock purchases in companies that are active in the lithium market, keeping those shares for an extended period in the expectation of realizing a profit, and selling those shares after reaching the desired level of profitability. Trading on the fundamental price movements of lithium stocks can also be done through the use of spread betting or CFDs as an alternative. Spread betting is a method of gambling on the price movements of underlying assets in a tax-advantaged manner without being required to assume ownership of those assets. CFDs give traders the ability to purchase or sell many units of an asset simultaneously, with the difference in price being traded when the contract ends. Before you can spread, bet, or trade CFDs on lithium stocks, you will first need to register for a live trading account. With the help of our news and analysis tools, you can stay current on everything happening in the lithium business. Determine where you will enter and leave the market based on your trading plan. You can either go long and buy the instrument or go short and sell it, depending on how the price of the instrument moves. Make sure you have read the risk management regulations and comprehend them before entering into a transaction. Your trade should have any risk management orders such as stop-loss orders applied to it before it is confirmed. If your position is lucrative, you should stick to your trading plan and get out of the trade when the price reaches your target. Lithium stocks to watch. We are going to provide you with the best 3 lithium stocks to buy, which, as was just discussed, have the potential to burst in the near future and ignite your investment portfolio. Albemarle Corp. Lithium is the element that is most common on Earth. The filing with the U.S. Securities and Exchange Commission says that Albemarle, based in Charlotte, North Carolina, is a preferred global lithium partner because of its ability to scale and geographic access to the global lithium market and its low-cost operating resources. Sociedad Química y Minera de Chile, SQM. The Sociedad Química y Minera de Chile, a chemical company based in Chile, is one of the leading manufacturers of lithium in the world. The nation, where the business was established in the late 1960s, is known for having one of the most considerable lithium reserves in the world, which has proven beneficial to the company. The rapidly growing demand for lithium in the electric vehicle industry prompted Sociedad Química y Minera de Chile to broaden its production to include lithium carbonate and lithium hydroxide. This expansion occurred in the Salar de Atacama, located in the northern region of Chile. Another source of revenue for the company is the manufacture of iodine and potassium nitrate. Livid Corp. Another one of the most well-known companies specializing in lithium technology is this one. The company services various industries with its high-performance lithium products and solutions, including the aerospace, pharmaceutical, and industrial sectors. In November of 2021, Livid unveiled Livid, a lithium metal product that has been granted a patent and has the potential to improve the overall performance of lithium-ion batteries while simultaneously reducing production costs and assuring environmental sustainability. Livid is the undisputed industry leader in battery technology, and the development of new technologies in this sector indicates that there is still room for additional innovation in this space. Risks in lithium stocks. Putting your money into lithium is not a foolproof strategy. A number of factors, including the hazards associated with cobalt, the geopolitical situations, and the possibility of running out of lithium as a metal, contribute to lithium stocks having an occasionally high level of risk. In addition to that, the high prices continue to be a worry. However, one may choose to disregard these to put their money into the stocks of companies experiencing a surge in demand for lithium. If you have a long-term investing strategy and are comfortable with the level of risk you are willing to take, investing in lithium may present you with possibilities to make purchases. Participants in the market believe that lithium is a valuable commodity because of the numerous industries that can benefit from its use and the anticipated demand for electric vehicles. However, because the commodity cannot be traded directly, several levels of research must be done to comprehend its value in the market. Why are stocks in lithium falling? Late in 2021, many lithium stocks hit all-time highs. In 2022, the sector hit a snag, and many stocks are significantly down from their highs. Part of this is because the market goes through cycles. After many years of solid growth, lithium stocks were due for a correction. Late in 2021, Goldman Sachs said that based on market conditions, the prices of lithium stocks as a whole were too high. Since then, prices have gone down to where Goldman said they would go. The Federal Reserve has raised interest rates by a lot, which has caused the stock market as a whole to go down. If the demand for electric vehicles, EVs, and other electronic goods keeps going up, it should be good for lithium stocks, even if they go down sometimes. So that's all for today's video. If you like this video, click the like and the bell buttons. We'll have another video for you soon. Take care until then.